good, y'all? Let's go over rejection blocks, or RBs. So what is a rejection block? A rejection block, or an RB, is a PD array that occurs when price reaches a specific level multiple times and continues to reject this level. They indicate potential reversals or a continuation of a trend. So how do you identify a rejection block? Rejection blocks can be identified via 2 or more wicks rejecting a key area in price. So as you can see here, we have 3 wicks rejecting this area in price. So use the highest wick to the highest candle body, and that whole area represents the rejection block. So why are they important and how to trade them? Rejection blocks act as a strong indication of respect regarding a key area in price and reluctance for price to trade past this area. Usually the key area will be a fair value gap or some other PD array. They can be used to identify potential trading opportunities and are often associated with higher probability trades when combined with other ICT concepts. So real quick, let's go over a couple examples. So before I show you guys, I want you to try and find the 2 rejection blocks that I see here. So the first one I'm seeing is right here. We use this candle body to this wick low, and this is our rejection block. So as you can see over on the left side, we actually rejected and respected the key area of a BISI, or a bullish fair value gap. So in theory, it's very simple. We respected this BISI multiple times, showing a bullish bias. We actually could have drawn this as the rejection block and took our entry here at this candle's low, or a lower time frame PD array. So we actually have another example right here. Here is our rejection block, and we were respecting this fair value gap, or BISI. And as we learned, a BISI is just a bullish fair value gap. Here's another quick example, guys. We have a rejection block here. We're rejecting this BISI. And as you can see, we came into an entry here, and then we went back up. So one thing to note, one thing I like to see with rejection blocks is high resistant liquidity. But basically what that means is you don't want the wicks to be forming a trend line. So when there's no line like this, it's basically higher probability, just because there's less liquidity to be taken there. So yeah, that pretty much does it, guys, for rejection blocks. They're very simple. I'd rather you guys use them as indicators of bias and order flow than to take trades directly off them, but it's up to you guys how you use them. As we've seen in these examples, they can be very strong indicators of where the market wants to go. So I hope you guys have a strong grasp on this concept now. We'll see you guys next time.